Oil and Gas Investors' exclusive Premium Blend video series presents in-depth conversations with executives in E&P, finance, transactions, and technology. How was WPX able to make solid deals in such a tough A&D environment?
We had two transactions working simultaneously, the San Juan Midstream and the Piceance, and we felt like we would like to transact on one of those prior to year end. The actuality was that the San Juan was able to transact late in the year. Piceance, we had to go into the first part of this year. And we had a lot of skeptics that the A&D market has been very tough. WPX, I think, has done a great job. We've transacted, like I said earlier, $5.5 billion worth of transactions the last 22 months, and so very few companies have been able to do that.
With the Piceance sale at $910 million, you far exceeded the guidance you had given for 2016. Does that mean you're finished for this year?
I think what it means is that we're really in a nice position right now. A lot of companies, a lot of management teams are talking about divestitures as a way to delever. Quite honestly, it is a tough market right now, so we did get out ahead of the herd, so to speak, and so that's gone real well. As far as additional divestitures this year, we really we'll let that play. We'll see how it plays out. Something we certainly don't feel a great deal of pressure to do today. We've talked from time to time, maybe our Permian Midstream that came with the RKI transaction. There's quite a bit of value there, and that's something that we could possibly do a joint venture with someone, but once again, not a lot of pressure to do anything right now.
How important were hedges for both sides in the Piceance deal?
Because of our position, we already had hedges existing, and we were able to enter in some additional that really helped them. But had they not have done that, and we were just looking at what the forward strip was trading at, that's where you hear a lot of people talking about the bid and ask, and there's just too big a gap. And that's what happens if you don't have some hedges that can go with it that really helps consummate the deal.
What did you see about natural gas that led you to start to delever from it and increase your portfolio in oil?
When I go back to 2014, before we've seen the softening of crude oil prices, we felt like we needed more of a balance in our portfolio, and specifically for us, we really wanted to improve our margins, our operating margins. And so if you looked at historically WPX relative to most of our peers, we did not screen very well, quite honestly. And that was because we had a lot of gas, and it was in areas where we had pretty thin operating margins. And so we just felt like fundamentally we needed to change our portfolio. And so we've gotten out of some Powder River Basin, some mature coal bed methane. We got out of the Marcellus, including some firm transportation obligations. And that we felt like that was going to be an area that was going to be very challenged from a marketing standpoint, infrastructure standpoint. That certainly has played out certainly near term. So when we started looking at the portfolio, it just needed, we felt like some work and some focus, and so that's why we have focused into the three more oil-prone basins we're in now.
How vital is credibility and trust in deals, as you've demonstrated in closing your deal with Ronnie Irani's RKI Exploration and Production?
In tough times like these, that's when credibility, and that's when trust really come through, because in some cases you may have certain parties that may angle, it's a competitive world, there's no doubt about it, and so everyone's trying to work the best deal, but at the same time, what we saw was both sides looking for a win-win, and not just a short term, but more of a long-term focus. That's the way we looked at it, and I believe that's the way Ronnie looked at it as well. He built those assets up from nothing, and so a lot of admiration for what he's done from our team, but I think he also had some admiration of what we've done operationally and technically. With not only my background, but Clay Gaspar and Kevin Van and Brian Gadere, a lot of our team, and so it was truly a positive experience, and so the 8 weeks was pretty much the negotiating, and then we had some other things to get it to a PSA level, but once the PSA was executed, we had the deal closed about 30 days, which is it's phenomenal. I think it's a testimony to the work ethic of both sides and the efficiency of both sides.
How does WPX remain positive in a market like this?
I think what we're seeing is our stock price has traded off some, and it's because of the debt. So we do have a little more leverage than we'd like. That being said, what the transactions that we have done have allowed us to do, our first maturity actually is the first quarter of next year, 2017, and it was originally for $400 million. We've already paid off $100 million of that $400, and so we'll pay off the remaining $300. We don't have another maturity until 2020. That being said, I think the market does recognize we now have core assets in the Delaware. It's some phenomenal returns right now, even at today's commodity price with the job that our team's doing. We're the core of the Bakken, and we have the core of the San Juan. So we have some great assets. I think we get a lot of support from a lot of shareholders. So it's all about accountability, and that's doing what you say you're going to do. All about credibility. You know, at the end of the day, through the ups and downs of the commodity cycles, the complications of business, can this team deliver what they say they're going to deliver? And we've done that.
Are there any particular issues and challenges that WPX faces in this downturn?
We're a very positive organization, and so all through this down cycle, we rolled our sleeved up and we've just been working through it, and that's what we're going to continue to do. Don't get too heady in the great times, but also don't get too depressed during these down cycles, because it's business. And so what I see now is we do have quite a few stressed companies, but we also see a lot of negativity. Management teams really have to look through this and make sure that you've got a base plan, you've got a strategy, you've got an end in mind, and you just keep working your way through that. And that's what we're doing.
To stay up to date on the most recent Hart Energy videos, subscribe to our YouTube channel by clicking here.